Yes. So as I was saying, we are looking at the Form 5 syllabus with a touch of the Form 4 work, because again, what you all would have learned in the Form 4, you all will definitely be using it here in the Form 5. Part of, for exam. So it's not just Form 4 work going to be in the exam and then just Form 5. It's going to be a combination of the both, right? So during this session, you guys, you all are open to ask me any question. I'm going to try my best to answer as much questions as possible. And the good thing is you all will be able to get all the recordings of every session for the month of this whole summer program on YouTube. Yes, I said it. You all could go on YouTube and you all could get the recordings. If you all missed something, if there was a little distraction in between, you all are free to go up on YouTube as many times and to review this session as well as the other sessions offered for this program, right? When the new term starts, which, I will later on at the end of the program, I will be talking about, what you all will need to journey for the September term when you are looking at, for exams. So what you all will need to get, your basics, you'll have to get your textbook. And I know for those who are not the first time with me, but those who are familiar with me, I am still sticking with the textbook. Yes, I'm seeing you guys putting up the Frankfurt in the chat. Yes, the Frankfurt Principles of Accounts textbook. I will share the screen to show you all how this textbook looks like. That is the recommended textbook for the exam, right? And it is what helps you prepare better for the exam, actually. So I recommend the Principles of Accounts by Frank Wood textbook. It could be the 5th edition, it could be the 6th edition, it could even be the 4th edition, right? So when we're coming on closer to when we actually need to get the textbooks, or even now, if you all could get them, that would be good, right? It is something that we need to use. That's just one so far. The second material that you all have to get is your calculator, financial calculators, scientific calculators. We are not going to be practicing with our cell phones, right? The cell phones, we want to, during all the sessions that we have, we want to actually, prepare for that exam. And how do we prepare? We are setting the mode for what you will need for the accounts exam. And you will need to get your notebook to write your notes. I would suggest, even though you all are seeing the slides and it's going to be up on YouTube, just try to remember that when I give explanations in class for every slide, if you all think you all might forget it or something new that you should have known from, let's say, from 4 days, feel free to write down your little jottings down, your little notes at the side, right? So I would suggest that you all have a notebook, right? Your basic stationery, your pen, your pencil, your ruler. When we do questions in class, we will be practicing with pen, not pencil. I know you all love to use your pencil, but we are again practicing. We are trying to ace that exam, and we are going to ace it. Once you all could journey with me throughout this period, if you have any questions, you are free to ask me. Okay. So let's get started. So we are starting off with the financial statements, right? So in the Form 4 syllabus, you all may have looked briefly on the financial statements of, let's say, a sole trader. And if you all could remember, you all know what a sole trader is? Anybody want to message me in the chat? Yes. I can't pronounce some of your names, but I'm seeing Aaliyah. Yes, do you remember what a sole trader is? So just in layman terms, if I just come and ask you, someone, what is a sole trader? Who is a sole trader? A person who starts a business, good, Alicia, that's a good answer. Someone who owns a business by themselves, good, Darla, that's actually a great answer, right? So you all may have looked at these financial statements that a sole trader may prepare. If not, that's okay. We are looking at it here now. So we have income statement, which is also called the TPL, also the trading and profit and loss account. So the income statement, what it's saying is that it will report the financial performance of an accounting period. Accounting period could be, let's say, 3 months, 6 months, 1 year. So based on the performance of the business, the sole trader, I just call sole trader, it have partnerships as well. It have companies that prepare financial statements, and they may prepare it for just a 3-month period, a 6-month period, or even just a year, right? So that is why we have this financial statement to just show the performance of the business. It is assessed by giving a summary of how the business earns revenue and incurs expenses in its day-to-day operations. So how best they could actually do that is through the financial statement. It is considered to be the most important of the financial statement because it shows profits or losses suffered by the business. Right, so I'm going to stop there for a while. So seeing that this is the first slide of this first class, I know you all may have some questions. You all will have some concerns. Do you all write the notes? Do you all take pictures of the notes? So eventually you all will get access to these notes, not just on YouTube, but I'm also going to be creating, well, it is a work in progress, e-learning via Google Classroom, where materials will be posted for you guys. So you all will always have it with you guys to study. When you're all ready to, get these materials, it will be uploaded at the end of every class. So you all could go into the Google Classroom where you all need to have a Gmail account so that you all can have access to these materials. So it's not going to be just slides, it will have past papers and whatnot, and the textbook and the syllabus and all those kind of things, right? And while this is being uploaded to YouTube, there will be times that I'm just going to note that you all could go back to YouTube and refresh the page, pause it, take whatever notes you all may have, and please address it by the next class, right? So I'm just answering what I just spoke of. I'm just answering those questions that I just saw in the chat. So the Google Classroom is a work in progress, right? So when that time comes, you all will get those materials. So continuing with financial statements. So you all don't just want to just score 1 mark in the exam, but you all will want at least a mark, right? To get that 1 mark for the exam, so far, just you want to aim for at least 1, you have to have your headings. And for every financial statement, whether it be for a sole trader, a partnership business, company, or whatever it may be, whatever firm that you're preparing your financial statements for, you have to prepare your heading. Make sure your heading is what you see on the screen here. You have to have the name of the organization. You state what you're preparing, which is your income statement. And in the 3rd line, you are going to state what period you're preparing your financial statement for. So it is going to be for the period ended. It could be December 31st, or, you will have that basically, right, as your heading. So please remember, it's 3 lines. Don't worry, when I start looking at your formats, which this class is going to be very interactive. I know now during the summer period, I will see how best I can get your answers. I will give you all a way to communicate with me. Could be via email, where you all, when we have questions to do, you all could send me, your feedback, your responses. So let us look at the components of the income statement. So the first thing that you will notice with the income statement is, having profits. And profit is defined as the financial benefit realized when the revenue earned from business activity is greater than the expenses incurred. So you imagine if your revenue, let's say your sales is $1,000, and your expenses came up to $600. Seeing that your revenue is greater than your expenses, this business is definitely going to incur a profit of $400. On the other hand, when the revenue earned is less than the expenses incurred, the business suffers a loss. And how do we know if we have a loss? When we see in the example, this revenue is 1,000, but expenses is 1,200. So we see expenses being greater than revenue. We get a loss of $200, right? So profit or loss, when we actually get it, I will show you all the format. I know it might be a little fuzzy for you guys, whoever did income statements prior to this class. We will be getting the format for this statement of financial positions. You will get your income statements. You have all your formats there. So when we start our questions, you will just be able to know how to highlight what items will match to what part of the format, right? So we see revenue and we see expenses. So let's just get to a definition of okay. So for those who are asking, right? So we have the format. Remember the format, whatever name of the organization, what you're preparing, and the period. Make sure it is in 3 lines. So let's say you use your notebook, your 3 lines, and I'll show you all in an example in a bit. So we have revenue and we have expenses. So these are just some theory part. I know for those who really love accounts, you want to just get into the calculations. Yeah, I can't wait as well. But we just have to understand the basics here first before we get to the calculations and the formats. And you want to be able to feel good when you're balanced. So we want to get to that stage. So let's just get these theory out the way. So revenue, we know it is money that you would have gotten from, let's say, the sale of a good or a service. For example, sales, interest received, discount received. Expenses, on the other hand, is any kind of payments that will come out of your pockets, right? Let's say you have to pay for carriage outwards. Can anyone remember what a carriage outward is? That's a form for term that you all should be familiar with. So I'll give you all a hint. There's carriage inwards and then there's carriage outwards. Yes, Darla and Akila Edwards, you all are correct. Carriage outwards is transportation. So the question now is it transportation in the business or is it transportation out of the business? Well, common sense, carriage outwards, we know it's out, right? So you're seeing some common sense things here. We have discount allowed, we have rent, we have depreciation being an expense, bad debts, just name it. Just think of what you are going to be spending money on. It's an expense to the business. Revenue is what you get from selling a good or a service, right? So we will see more of that in a format and in a question in a bit. So this is your PoA Bible right now. This slide, I consider it your PoA Bible. This is basically going to summarize all the challenges that you may have in accounts. Just summarize it into just this one particular slide. And no, you don't have to write it down. You can remember YouTube, it's there. You all could pause it, look at it. Let me just explain what this lovely slide is telling us. So we have some components in the financial statements. We have assets, we have liabilities, capital, revenue, expenses. We all know what are assets. Yes, I hope that you all know what are assets. If not, just briefly, anyone want to just say what an asset is? Anybody remember what an asset is? Give me an example of an asset. Right, it's resources in a business, land, cash, yes, I'm seeing some answers. Buildings, motor vehicle, what you own, like cars. Yeah, very good answers, you guys. So furniture, yes, I'm seeing some good answers coming through the chat. Now, when we have assets in a business, is what the business own, O-W-N, what the business own, right? We are not owing anybody anything. Assets is what we own. So when we get more assets in a business, let's say assets increase, we will tend to debit that asset account because it is adding value to the business. But if it decreases, whereby let's say we have to sell the motor vehicle because it's old, I'm just going to get rid of it. So the asset is going to deplete itself. It might be leaving the business, getting rid of it. So an asset that decreases will have a credit balance. So normally in accounts, assets will always have debit balances. It's only on rare occasions, if the asset decreases, you will have a credit balance. Right? So I hope you all understand that. When we get into some more questions, you will see how this whole debit credit works, but this would have been prior knowledge I hope you guys would have had. This is just a touching up of what accounts really entail. We have liabilities. So liabilities is what the business owe or owns. Can someone just tell me? Owe or owns? O, right, O-W-E. Good. So what the business owe, sorry, what the business owes, it's a liability. And when we have to increase a liability, because the business is owing money, so how is it that the business started to owe money in the first place? So I'm seeing Alim Sanka giving me a good answer here, a bank loan. Loans, yes, right? We getting some money here from, let's say, the bank. The bank gives us some money. You think the bank going to give us a just so? No, we have to pay back the bank, right? So let's look at a double entry here. So we can understand why liabilities have a credit balance. We're getting money from the bank, great. You take the money and you put it in your pocket. Money is the asset. So it's coming in, it's going to be debited. So cash will be debited in our pockets. But the bank, this loan now will be credited because it's what we are owing the bank money. We got to pay back interest, so interest, right? So loans, interest, those types of creditors, whoever we are owing, we are going to have a credit balance. But if it decreases, whereby, all right, I got some money, I can pay back the bank, that means I'll be decreasing the amount owing to the bank. So instead of me increasing it, I'm decreasing the amount owing to the bank. So I'm going to debit, right? I'm going to debit whenever I am paying back my loan to the bank. So generally, liabilities will have credit balances. When we get into our format, we're going to come across different types of liabilities. Even with assets, we're going to come across different types of assets. Right? So we have 25 slides in this session. So let's see how we can improve on our understanding here of just this one simple set of information here. Capital is our next term and next item that you will see. So Latoya, you are saying a very good answer here. Capital is anything used to start up a business. Good. Aliyah as well. So whatever you use to start up a business, you are going to credit. Why credit? Why are you crediting capital? If you use to start up a business, why are you crediting capital? It is because whatever you're using to start up the business, that's say money, I invest some cash into the business. Cash is going to be debited because it's an asset account. It's the asset is going to be coming into the business, which is cash, and we are going to credit capital to show that it is increasing. We cannot have two debits. The normal accounting rule, for every debit, there must be a credit. So we will debit the asset, which is money coming into the business, and credit capital because we know it is adding value to the business. But if it decreases, well, debit. So usually they have a credit balance. All right, so revenue. Revenue generally have credit balances, and we just spoke what a revenue was. We just said it. Revenue is anything that you sell, whatever you receive in a business, anything that allows you to, gain something in the business. That's your revenue. And revenue have a credit balance. Like, for example, sales. Annalise, Richards, that is correct. Sales. Sales is an example of a revenue. But why is it credited? So don't always think, you guys, I know some students always have this confusion, and I always try to, not always try to, but I just have to let you all know, not all the time when you see a debit, you instantly think it's coming inside your pocket. It's your money, it's yours. No. It only goes for assets. When you receive an asset, yes, you debit. But if you have a liability, it's because you got money, you got cash, which will be debited, and we will credit whatever liability. Where did we get the cash? We get it from a loan, we could credit the loan. We get it from a creditor, we credit the creditor, right? So not all the time when you're getting money that it's going to be debited. Like for this, we know revenue is money that the business got, but it's credited. It's because we got money. Let's say I sold some books and I got cash from these books. I am going to debit my cash, which is my asset account, and I'm going to credit sale of the books, right? The books left the business, you credit the revenue account, and we debit cash. And the opposite will apply if we have to decrease it. Let's just say our revenue decrease, we will debit it. So our normal balance is credit. And then we have expenses. So you see, we see debit here. So you might be thinking, oh, money coming inside our pockets. No. Expenses is when we have to pay for something, right? So imagine you renting and you have to pay cash every month for that rent expense. So money is definitely not coming inside your pocket for that. So why are we debiting expenses? We will debit expenses not only because expenses are debited, the double entry where there's a debit and there's a credit, the credit will be for your cash. We're paying rent expense, we will credit whatever we are paying. So we are paying for, let's say, rent expense. We are using cash to pay for this expense. So we will debit the expense account and we will credit the cash account. So this is basic double entry principle that if you all think you all have problems with, please refer back to your Form 4 notes. There's also a Form 4 class on Monday from 6 to 7:30, right? We had a glitch yesterday, but we are looking at all the business subjects. We have PoA Form 4 and PoA Form 5. If you think that you're going to be confused for the Form 5, go to the Form 4 class. You all can go to the Form 4 class, get your refresher in. So when September starts, before you enter the class in September, I'll be doing a little assessment on you guys to see how best you all understood the whole 4 weeks session that we have. All right, so let that be an encouragement for you guys to continue with the Form 5 syllabus. So at least you all could take a picture of this so that you all will have it. You all could put it as a screensaver on your phones. I mean, PoA is live. So yes, this is a good way for you all to remember when we debiting, when we crediting, what we debit, why we debit, when do we credit. This is a very good, simple, but useful slide, right? Let's move on. Components of the income statement. So what I want to show you guys now is the format of the income statement. It's very simple. It didn't line up, but okay. So we're going to look at the format here of the income statement. So we have the name of the organization, first line. Second line, what are we preparing? Income statement, also called the trading and profit and loss account. Third line, for what period? For the year ended, we can say December 31st, 2021, December 31st, 2020, May 2022, right? Because it doesn't matter. Let me see if I could zoom in. I know some of you guys, I don't, let's see. So it says better, John, just give me a thumbs up if you could. Okay, great. So we have sales. So I know some of the questions. So for the past 8 years, I know I've been teaching this subject. You know, I would have heard all the challenges from past students, and I bring those challenges to you guys right now so that I can try to help you guys to understand accounts a lot better. I'm going to bring the challenge. I'm going to tell you all, okay, miss, why is there $3 signs? Why is there 3 columns? These are the questions that would have been drawn to me during the last 8 years. And I just want you all to know that when I think of these questions from my past students, I want you all to note them because I know you all will have problem areas. It's okay to have problem areas, but make sure they are corrected before the exam. So we're starting with our format here with sales. And you notice the 3 columns. We are placing our sales figure to the far right-hand corner because the only thing that's affecting sales is our return inwards. Return inwards, anybody want to just pop in the chat, tell me what return inwards is? Not something that is being returned inwards. I know you all have. Okay, sales return, goods returned by the customer. Very good. Very good, Amari. Right? So anything that, so how do we get a return inwards? We would have basically, we would have, let's say, sold goods to a customer. The customer found some fault in it. It's not good. Let's just say that, for example, it's not good. What does that mean? Is that the customer is now going to come back to the business and return that good. And when they return the good, it's called a return inwards because you would have sold the goods initially and they're coming back to return it. They can return it for money, get back the money, return it to get some other good, right? Right? So we have here return inwards. When we less it from our sales, we get something called net sales. So because I know when September starts is going to be, I'm going to be recapping all of this, you guys, but at a faster pace, obviously. I just want to get an idea now. Those who would have seen the statement already, who would have seen the financial statement. So let me just get a raise of hands. I know it's 173 of you guys. Let me just see those who, okay. So I know how fast I should be going or how slow I should be going. I just want to have an idea, just an idea. But I will still be recapping everything that you all need to know. All right, so it's a lot of you guys who would have seen it. So that's good, that's good. So I'm going to still recap it like it's new to you guys. right? I'm still going to recap it. So when we less or return inwards from our sales, we get something called net sales. And we have it in our third column. After that, we are lessing our cost of goods sold. And cost of goods sold comprises of opening inventory, purchases, which is on the first column, right? Sorry, can I do this? Right. Sorry guys, I realize I can't use the laser while it's zoomed in. You're adding your carriage inwards to get our gross purchases. So purchases are carriage inwards will give us our gross purchases, and then we're going to less our return outwards. When we less our return outwards, we get something called net purchases. So whenever we're lessing anything, whether it be less return inwards, less return outwards, we're going to get a net answer. Net sales, net purchases. So we get our net purchases here. So we see our net purchases figure here, and we have an opening inventory. What we are going to do is that we are adding the two amounts to get our cost of goods available for sale. Our cost of goods available for sale, sorry. Our cost of goods available for sale, right? We're adding it. That is how much we basically, we're using our inventory, what we actually got in the business, what we got, what we actually have in the business. And then we're going to less our closing inventory. Right? So you'll just be mindful that the class is going to be finishing at 7:30, right? At 7:30. So it's basically an hour and a half of class. Okay. We then less our closing inventory, and we're going to get our cost of goods sold. When we get our cost of goods sold and we minus it from our net sales, we therefore get our gross profits. Gross profit added to any other incomes will give us our total income, which is in this X right here. So for example, commission received, discount received, those are some additional incomes. And then we have to less our expenses, we total them, and we get our net profit. So I'm just going to decrease the size here now. So if you need to take a picture, you could take a picture and zoom it up on your phone. So you will always have it with you guys, because we have some questions to do on income statements. Okay, so I'm moving on. So components of the income statement. So the profit and loss. All right, so I'm just going to stay on this for a while since some of you guys are asking. Just take a picture here. Just remember, all of this will be uploaded. Please make full use of all the sessions that are being uploaded at this time. Share it with your friends, like it. Just make sure you all have them. Subscribe, because this is what we are going to get our distinctions with. We are definitely working towards those distinctions. Right, so I'm moving on, right? Trent, you're good? All right, moving on. So components, right. Components of the income statement. So the profit and loss account, we just saw it to be the bottom half, right, of the income statement. And it shows the results of the business operations. It is used to calculate the net profit of the business. Net profit, we just saw it to be your gross profit. I needed to just, you know what I'm going to do? I'm just going to change this up a little bit. Sorry, you guys. Let me just escape for a minute. I want to just change this little wording here. So it should be so before I had it as gross profit minus operating expense and add income, what we're trying to get here is, our gross profit plus other incomes less our operating expense. Operating expenses are just basically all the expenses. So you'll come up to the chat if you have any questions, right? Just remember that the chat is open compared to yesterday, how it was. For those who were there, it is open, but in a controlled way. So please be careful when you are asking me these questions. Whatever questions that you may have, please note the questions that you all are asking, right? So an operating expense, we see it just in the last slide where we have advertising expenses, discount allowed, carriage outward, salaries, all those are different operating expenses. Marsha, you have a question? Marsha Jarvis, you can message me in the chat, right? All right, so if you all can't see the slide, I would suggest that you all close off Zoom and log back in. You all will automatically log back in, right? So I don't need to accept you all in. So log off and come back in and you all should be able to see this slide. So I'm moving on. So other income referred to like non-sale revenues earned by the business, commission received, interest received. You're going to see all that in a format in a bit. Profits, profit and loss, gross profit, net profit. We just look at these different equations in the format. So this is just something for you all to just note. Right. So we're still on financial statements. We are still on financial statements, but right now we finished looking at the income statement. We are finished with the income statement. Now we are looking at our balance sheet, which is our statement of financial positions, which will show assets, which we know already, debts, which is our liabilities, and capital, which is the owner's equity. This statement will only provide will present itself only at a single point in time in the business accounting period. We consider it to be the second most important financial statement since it shows the theoretical value of the business. All right, so note this, what it is about, and you want to get 2 marks in, sorry, I'm not going to keep saying you don't want to get 1 mark. No, you're going to get all marks in the exam. You're going to get all the questions correct, right? But you want to get at least a 2nd mark. The next slide will give you your 2nd mark, your heading. I'm going to keep stressing on this because I see too much students losing marks in, basic formats. And the basic format, and I talk about basic, just the heading. When you write an exam, or you're applying for something, I'll show you write your name. When you're preparing people books, write the name of the business, write the name what you're preparing, whether it be the income statement or the balance sheet, and add for what period. Write the people information down, and then you all could continue with, I know you all want to get straight to balancing. I know that's what you guys are up to. I was once in your shoes. So don't be like me and lose a mark in exam, right? So name of the organization, statement of financial position as at for, and you're noticing that in this third line, I have as at. Another mark that students tend to lose through markings for the last how many CXC, PoA, is that students tend to put the statement of financial position for the period. That will be wrong. For the period, let me just give you, I'm just going to go back so don't get confused. I'm just going to go back to the format. The income statement is for the period. I'm going forward now. The balance sheet is as at a particular period. Please note the difference. Please get at least your second mark in exam. So the statement of financial position, also known as the balance sheet. So we just came across assets, liabilities, and capital at the start of this session. As a recap, assets is what the business owns, liabilities is what the business owes, and capital is wealth invested in a business by the owner or owners to create further wealth. When wealth is withdrawn from the business by the owner or owners for personal or private use, what is this called? Anybody who wants to volunteer? Okay, so I'm seeing some good answers. All right, all right. Well, you're really informed, 5 boy. Okay, nice. This is good. So I know I can step up my pace a little bit here now. So the answer is drawings. This is called drawings. Good, you guys. Good. So the short, right? Okay. So components of the financial statements. So this will still under the statement of financial position, which is the balance sheet. And I know someone in the chat asked earlier, there are different types of assets, miss. There are different types of liabilities. Yes, you are right. We have different types of assets as well as liabilities. Types of assets include fixed assets, current assets. Another type of fixed assets is non-current assets, right? So since we're like a show of at all in Form 5 and thing, let me ask you all a little question. If we have these types of assets and we're talking about the balance sheet, you know that you could arrange your assets in a particular order. Anybody know of these two types of orders that you could prepare your balance sheet? All right, so very good. All right, I'm gonna have my okay. Very good, you guys. I'm seeing some excellent answers. Yes, we have these two orders of arranging our assets. We have order of permanence and order of liquidity. Very good. So just briefly stating, if we have order of permanence, it is the presentation of assets in order of how permanent or how long lasting they are with the business. So could you move land? Okay, I'll get your names after. It will, but anyway, could you move land? Could you like take land from Port of Spain and go south of it? No, no, right? No, right. So therefore, land being here as your first item on the non-current assets, which is also called the fixed assets, it is impossible to move land. It's also impossible to move a building. It might be at least impossible to move equipment. It could be possible to move motor vehicles, fixtures and fittings, furniture. So you'll see what I just did. I just told you all what is impossible, could never happen, to what is possible, that can happen. This format here is what we call the order of permanence. But if I wanted to display my items in the balance sheet with order of liquidity, it will show basically how easy your assets can be turned into cash. You're placing what is easily converted into cash being the last item. What is kind of difficult to turn into cash would be your first item. So order of liquidity is the presentation of assets in the order of the amount of time it takes to convert them into cash. So could you convert inventory into cash easily? You'll have to get someone, you have to ask them if they will be interested in it. You might have to sell it, you might have to get the cash eventually, you may not get it right away. Accounts receivables. Accounts receivable you could get cash hopefully from them once they pay off their debts on time. You have accounts receivables is a fancy term for debtors. Debtors who owe the business money. If they come now and they pay, well, good, we get cash. We have prepaid expenses. And I'm sure some of you all would have heard prepaid expenses and accrued revenues, and maybe still getting mixed up with the two. No worries, we are going through this one at a time when we start looking at some questions. So when we think of prepaid expenses, think of something prepaid. Think of something that you paid in advance. So if I pay for rent in advance, let's say I pay for, what month we in? July. I pay for August, September, and October one time. That means, you know, I made an advance payment. And as a result, it will be on the current assets. Accrued revenue, on the other hand, is when someone owes. So accrual means owing. Revenue that is owing, we see it here also under the current assets. And we see it coming down closer to bank and cash. We said order of liquidity is how we prepare our balance sheets. So cash being the last item, cash is cash. We already have cash. Cash is there. It's our liquid item. So as a result, it is at the end of the current asset section. And everything that we just spoke about, we're going to be looking at how we're going to account for these items, especially prepaid expenses, prepaid revenue, accrued expenses, accrued revenue, why we're treating it like this, why we are accounting for it like that. We are going to understand why. Remember, I'm not programming you guys like robots. I just want you all to understand why we are accounting for different things in our accounts. And I'm sure for those who are not new, who I've seen before, who had me last year, this year as well. Now this is principles of accounts, not just accounts. We're understanding the principles behind accounts. We're understanding why, the nature of accounts, right? So don't think I'm just telling you, put this there, put that there. Remember to do this. No, understand why. It will help you all in the exams. So this is just a little run through here. I don't want to spend too long on this. Reason being, these are just the items that you will see in the balance sheet. We will get to the format right after this, but these are the form. This is the item. So you will see fixed assets, also called a non-current asset, and we said it is something for, these are assets that will be seen in the business over a long period of time. They help to enhance the profitability in a business. For example, furniture, machinery, we have those examples. Current assets, it is assets that change in value from day to day as the business continues. So for example, stock of goods, closing stock, debtors, cash at bank, cash in hand. We will see it in a format in a bit as well. This is current assets. So right after fixed assets, we go straight down to current assets. Then we're reaching something here on the liability side. So for that person or persons who's asking, Miss, there are two types of liabilities. Yes, there are. We have long-term liabilities and we have current liabilities. Long-term liabilities also called non-current. Long, it's long-term liabilities. And then we all have here long-term, sorry, did I speak about, okay, right, long-term. So we have here the examples of long-term liabilities, loans, mortgages, hire purchase. You must repay them over a long period of time. It must be more than 1 year. Whereas with current liabilities, it is within a year. You have to pay back your debt within a year under current liabilities. All right, just so you guys. Right. Right. So current liabilities, we are repaying back within a year. For example, creditors, those are people who we owe. We owe loans has to be paid as soon as possible. So be careful when in the exam and you see a question where you just see loans. Loans could either be short term and it could be long term. It could be very tricky to decipher basically where would it go. Would it go on the current or would it go on the long? Is it a short-term loan? Is it a long-term loan? Chances are, look at the question again. You look at the additional information in the question, and chances are they might say loan is to be paid back in 5 years. Well, you automatically should breathe out a sigh of relief. Good, it's a long-term loan. That's how you will know. All right. Right. So there's another component here in the financial statement, which is called working capital, which is the amount of cash resources available to a business to meet its everyday expenses. So we have something called working capital, where the equation is current assets minus current liability. Why? What is working capital? Why does it have to be in the balance sheet? Well, we will know that working capital, yes, it's the amount of cash resources available to meet its day-to-day expenses. It also shows us the operating liquidity of the business, meaning is the business solvent or is it insolvent? I'm sure I'm bringing up these words here and I'm sure you are like, what is solvent and what is insolvent? Working capital will tell us if the business is solvent or not. Solvent, which will give us a positive working capital, whereby our assets, our current assets will exceed our current liability. And therefore, we have higher assets than liabilities. So we have a positive working capital, also called a solvent working capital. There's also something called insolvency. And insolvency, this is why working capital is so important. I show you all account for it so many times. I'm asking yourself, what is the purpose of the working capital in the balance sheet? We need to know how solvent the business is or insolvent it is. So if it is insolvent, it means that the liabilities exceed our current assets, and it will lead to a negative working capital. So I think the next slide will have it. Right, yes. So we have positive and we have negative. So you all think you all understand now the purpose of working capital in the balance sheet? I'm sure you all have been accounting for it and asking yourselves why. Do you all think you all understand? Just give me some thumbs up. Shout out, hey. Yes, yes, good. Nice. Right. So do you all have any questions before we continue? Because we just have a few more slides, probably about 3 more until the end of the class. Anybody have anything else to ask? Any questions, any concerns? You all are free to message me in the chat. Right. All right, so we are moving on. Okay. Yes, you all are getting these slides. You always see it up on YouTube. If once you like and share it to yourself, share it to whoever, just have it always there. You will always have these notes. And even after the summer program is finished and we start September's term, you will be getting access to a wider variety of materials. You'll be getting access to these past papers, different types of past papers. We'll be doing all these corrections. I'm going to message you guys the YouTube name. I believe I have it here. Yes, I will go back, Alicia, to this slide. Just remind me at the end of the class which one you want me to go back to. Right, so I'm moving on. Right, so the last item, the last and final item that you will see in the statement of financial position is our capital employed figure. Thank you, Janicia. Janicia sent the school link. Let me see if I could just forward it to you guys here. The school website to everyone. All right, so you all should see it here in the chat. No, wait, I think I made a mistake. To everyone. Right. Good. So we reach the last part. Imagine that. We reach the last part of in financial statements. Last part with regards to the format. We still have one more slide to do, another session that's going to be looking at the adjustments, the additional information that you will see in these types of questions. The last format that we are looking at is something called capital employed. And this is a part of the syllabus that I know some students have difficulties understanding due to the reason different teaching methodologies from, let's say, teachers and myself. What we tend to try to have this discussion on is by looking at the definition of capital employed, we are seeing that, yes, it is the amount of financing used by a business to acquire its assets, which involves your capital and your long-term liabilities. So how did you go about financing your business? It is through your capital employed section. Capital employed consists of assets. Sorry, it consists of your capital and your long-term liabilities. So the argument is where, sometimes you might see long-term liabilities not in this section. The correct answer, you guys, the capital employed, in order to get that figure, you have to take into consideration all of your liabilities, which is your long-term liabilities, as well as your capital. That is how you were able to finance your business. No arguments there. That's what the note is saying, and that is what we are applying to our format. And while I said the word format, here is the format of the statement of financial position. So I'm going to get this slide here bigger. Right? So the statement of financial position. We're starting off with our non-current assets, also called our fixed assets. Again, 3 columns. I should have really named these columns here, but when we start the question, just remember there are 3 columns in every statement. Amari, I see in your question if it is okay to use the 2 columns. It's about presentation. Presentation, when you're presenting your accounts to, let's say, auditors. Auditors are those who come into the business to check and make sure that you're not doing anything illegal, make sure that your accounting is accurate, you're not defrauding the government in any way, you're paying your taxes. That is why these auditors will come into the business. And imagine your business is a huge business. Your business is so huge, and you just put in your income statement in one column, or far worse, two. Let's just say two columns. It will become confusing eventually when we have so much more. This is a sole trader, by the way. We have conglomerates, we have companies, we have different types of accounts. If we just facilitate just two columns, it is going to get clustered. It's going to be confusing, right? So I would suggest that you all get the habit of know how to place your items in the three columns. So your first section here is your fixed assets. We okay with this? We have the total of your fixed assets. We have your current assets. We have the items. Cash at bank, cash at hand, we total that. From this stage now is going to be less our current liabilities. And our current liabilities consist of accounts payable, also called the creditors, and your bank overdraft. So when you add your total current liabilities, we get the figure here. I'm still basically good. I hope you're seeing the screen okay-ish. I just want to point at something here. This here, this X with the negative signs in front of it, that's our total current liabilities. So when we get our total assets and we get our total liabilities, we have to minus it to get that thing called working capital. So current assets minus current liabilities gives us our working capital. When we get our working capital figure, we add it to our total of fixed assets. When we add it to our total of fixed assets, we get our net asset figure. This is our balancing figure that we need to keep working to get at the end of the balance sheet to make it balanced. But it is so far the first half of our current liability, of our before financed by section. This is our balancing figure. Everybody okay up to here with net assets? Yeah? Yes? Okay, nice. Great. So we moving on. So see now this is the first part. Join a little double on the line because we know we had to get back to this, wherever this number is. Let's say it's 5,000, right? 5,000. So we got to continue to get this 5,000 to the last half of the balance sheet, which is the finance by. So finance by consists of our opening capital, our net profit, your less your drawings, and we get our closing capital, which is this figure, you guys, this figure. And then we are going to add our long-term liabilities. Long-term liabilities is going to consist of, let's say, mortgage, loans, right? When we have our long-term liabilities, which is the mortgage, when we add up everything here, which is our closing capital and your mortgage, look at 5,000 here. Let's just imagine 5,000, right? So our 5,000 will be balancing back off to the 5,000, which is your net assets. And that's it. That's it right there. Right? Plain and simple. Nothing complicated, no rocket science. You know why I say there's no rocket science? Look at format right in front of you guys. The format is right there. So you know what I'm going to give you all now? A question. And I will record just the question alone, and I will stop recording for you all to actually attempt the question. And next class, we will be correcting the question. So just to reiterate, we finished look at the formats of the income statement and the balance sheet. And we are going to look at a question here now, right? It's just for you all to plug in the figures here now. So I'm going to stop sharing. I'm going to share now with you guys the question. Just locate it. A very simple, very, very simple question. By the time being, while I am, yeah, Chantal, when we actually start in September, we have so much groups, or it will be so popular. Or it will be so very popular. We have WhatsApp groups, we will have Google Classroom, we would have all these different groups just to reach out to Miss and all your other colleagues here. So I'm just trying to locate the question for you guys. Okay. Could you all see the screen? Just by a raise of hand. Okay, good. Right. So I'm going to try to make it, I don't think I can make it as small as possible because it's just one page. Just one page, which the question is to prepare a trial balance and a financial statement. So you all remember that financial statements with the format we just did. All right, just hold on. I'm going to zoom in two parts. All right, so I'll have to, this is the first half of the question up to salaries. First half of the question, sorry, up to carriage outwards. First half of the question up to carriage outwards. And the second half from carriage outwards to the instructions. Carriage outwards to the instructions. So you all definitely have to take a picture of this. I'm just doing it again. First half of the question is from question to carriage outwards. And the second half is your carriage outwards to your instructions. So in the slides, I had given you all the formats. So I hope you all still have them. You all are going to just put in basically the items that you all are seeing on the screen right now in the format of the income statement and the balance sheet. We are looking at part B. But there's a part A as well, which is the trial balance. And I know at the end of Form 4 syllabus, you'll have to prepare trial balance for accounts. Can I just get a thumbs down this time? Thumbs down for those who never prepared a trial balance. Like, I just want to see some, if there's a thumbs down icon, is there? Or, okay. All right, so I'm seeing a few of you guys with a thumbs down. That's okay. We will be looking at it in depth. I know that somebody have a question. They had a hands up. They raised their hand. I don't know who it was, but yeah. What we are going to do is part B of the question. No excuses. Part B of the questions can be done. And when we come next class, we will be looking at part A, which is the trial balance. The trial balance basically going to allow you to put your items on the debit and credit side. The trial balance basically just checks the accuracy of all your entries in your books of accounts. So in all of your ledgers, all of your journals, when you balance off, you have your balance carried down, your balance brought down, you're focusing solely on your balance brought down figures, right? That is how we have a trial balance. So the homework question, it's not really a homework question because, wait, it is book at the time. Right. So yes, your homework question is basically to focus on part B of this question. Right, so I'm going to show the question again. The first half is question and the carriage outwards. This is the first half, question, carriage outwards. And the second half is from your carriage outwards to the instructions. Please utilize the formats that I gave you guys in the slides. Please utilize it. So when we come next class, we could actually address these questions, tackle this question together, and I will teach you all the trial balance briefly because it's a topic that is very simple. All you have to do is prepare a trial balance, which I'm going to show you all a format of. So for those who want to attempt part A and B, you all are free to do so. Just give me a second. Let me just stop sharing. And I'm going to show you all how this trial balance should look like. No, you are not taking a picture and sending it. We are correcting it in class, right? So the next task is the solution to this question that you all have to do. So this is here the format of our trial balance. We start off with the name, trial balance, as at the period. We have the details, debit, credit, and we listed all the items. Right, it's not supposed to be. Right, we listed all of the items. Right? Do we debit buildings? Actually, you know what? We actually did look at the PoA Bible. PoA Bible will help you all know whether or not we are going to debit or credit. So we have no excuses, actually. You all have to do part A and B. So I'm going to reiterate the homework question. Don't take it as a, oh God, we give us homework already. It's just for you all to go ahead and attempt the question. So when we come next class, when we are correcting it, you all will not be lost. You all will have actually put an input into the question, so you all will know where you all went wrong. Remember, this is a time, this is a phase where we have to know where we are going wrong so we can correct it. If we just come for the answers, then how would we know where we would have gone wrong? If you all understand what I'm trying to say. Go wrong now and make it up for the exam when you are ready to know how to correct where you all went wrong, right? So we listed, this is the trial balance, so we listed all our items from in the question, right? So again, this is the, where's my question? Right? This is the question here. Buildings, going straight down to drawings. They ask us to prepare a trial balance and the amount of capital should be included. And the equation for capital is assets. What is it? What's the formula for capital again, you guys? How do you find capital? Capital is equal to assets minus liabilities. Very good. So when we are doing this question, this trial balance over here, debit, buildings, I'll give all of that first one. We will put the buildings here randomly. We know salaries is an expense. Salaries is an expense. So do we debit expense or do we credit expense? We should debit the expense. So you'll keep going like that for the rest of the debits and credits, and you all need to know if you are correct by these two amounts need to be the same. That's when you all could feel proud and you all know that you are balanced and everything. When these two balance, you can move on to your income statement. But if you get stuck, don't just stop there. Go to the income statement, because it's not a question that needs to go straight to the income statement, right? So you all understand what you all have to do? Yeah. Okay, I'm seeing some yeahs. Yes, yes, nice. This will be uploaded again this evening. So I'm just gonna pause it here so you guys could see the recordings on YouTube.